Hey traders, welcome back to the channel. It is Thursday, February 19th. Hope you all had a good day, had some good trades. So the market just closed, and what went down today is a perfect lesson in how Wall Street actually works, because sometimes good news is actually bad news, and that's exactly the trap that the market fell into today. So the S&P 500 dropped 0.56%, closing at 6,843. The Dow fell 189 points to close near 49,473. And the Nasdaq slid 0.60%, landing at 22,621. 3 straight days of gains just got wiped off the board. And here's the story behind why. It all starts with the Federal Reserve. So yesterday after the close, the Fed released the minutes from their last FOMC meeting, and the message was crystal clear. Don't expect rate cuts anytime soon. A majority of policymakers said disinflation is taking longer than expected, meaning inflation is cooling, but just not fast enough to justify cutting rates right now. And here's where it gets interesting, because the very next morning, the government dropped jobless claims data showing fewer Americans are filing for unemployment. That's great news for workers, right? For the economy? Sure, that is good news. But for the market, it's the worst possible news. And that's because a strong labor market means the Fed has zero reason to cut rates. Strong jobs data plus hawkish Fed minutes equals higher rates for longer, and that's a ceiling on stock valuations. Then, as if the Fed wasn't enough, oil prices surged above $66 a barrel, hitting a new 2026 high because tensions between the US and Iran are escalating again. When geopolitical risk spikes in the Middle East, oil spikes. And when oil spikes, it adds to inflationary pressure, which makes the Fed's job even harder. So now you have hawkish minutes, strong jobs data, and rising oil prices all pointing at the same thing. Rates will stay elevated. Banks like JP Morgan and Bank of America fell over 1% because higher long-term rates squeeze lending margins when the market starts worrying about the economic slowdown those rates could cause. So now let's talk earnings, because this is where today's lesson gets really nuanced. Walmart reported this morning, and they beat on revenue, coming in at $190.7 billion, topping expectations. They beat on earnings per share, 74 cents versus the 73-cent estimate, and they announced their 53rd consecutive annual dividend increase and authorized a massive $30 billion stock buyback, their largest ever. And yet the stock was volatile all morning. Why? Because their forward guidance for fiscal year 2027 was $275 to $285 per share, and Wall Street was expecting $296. That's the lesson beginners need to understand. It doesn't matter how great your past quarter was, the market is always looking forward. Walmart essentially said, hey, things are still uncertain out here. Tariffs, drug pricing legislation, consumer spending. Smart move to be conservative, but it scared investors. To Walmart's credit, the stock ended up about 2% by the close, recovering as investors focused on the AI investments, the booming advertising business, which did grow 41%, and that monster buyback. On the flip side, Deere & Company was the real standout performer today, surging 7% after beating earnings and raising full-year guidance. That's the formula Wall Street actually loves. Beat and raise. Deere said demand is recovering from construction customers and smaller agricultural buyers, a signal that the industrial economy may be bottoming out. And Etsy exploded 21% after a strong fourth quarter pushed the stock back into positive territory for the year. So looking ahead, tomorrow is critical. The PCE inflation report drops before the open. And PCE is the Fed's preferred inflation gauge, and the consensus is 2.8% year over year. That's well above the Fed's 2% target. If it comes in hotter than expected, get ready for more selling. If it surprises to the downside, this market could snap back fast. So the bottom line today, this was a textbook good news is bad news session. Strong economy, hawkish Fed, rising oil, all working together to remind the market that cheap money isn't coming back anytime soon. Stay nimble, watch tomorrow's PCE number, and as always, trade the chart, trade the candlesticks, not your emotions. So have a good evening. See you back here tomorrow afternoon. Bye-bye, everybody.